Hello, I'm Victoria Fritz in the business news this afternoon. The biggest jump in military spending in 5 years has boosted figures for the US economy. It grew at an annual rate of 3.5% during the 3 months to the end of September. Business investment and strong export sales also helped those numbers. Barclays has set aside £500 million relating to ongoing investigations into currency trading. It's also set aside an extra £170 million to compensate customers wrongly sold PPI. The provisions come as the bank reports a rise in pre-tax profits. And UK house prices edged up in October, but mortgage approvals plummet. Nationwide says that although prices are still climbing to all-time highs, the market is showing some signs of losing momentum. Let's start in the United States, because the US economy is growing faster than many had predicted. In fact, economists are now revising their predictions for the full year and now think that the US is performing as well as it was back in 2005, well before the global recession. And against that backdrop, the central bank has ended its third round of bond buying, because over the past 6 years, the Federal Reserve has pumped more than $3 trillion into the economy through bond purchases designed to keep long-term rates low. And last night it said it was confident of the US economic recovery and that it would continue, but it retained its commitment to not raise interest rates for a considerable time. Let's speak now to Samira Hussain. She's at the New York Stock Exchange for us, and we can speak to her now. Samira, how has all of this, the last 24 hours, gone down with traders where you are?
Wow, it's been quite a 24 hours. First, of course, we have the end of the historic quantitative easing program by the U.S. Central Bank. And now today we're seeing that these growth figures for the U.S. for the last 3 months of the year, Victoria, as you rightly pointed out, it came in much better than what economists were expecting. You know, just to take you back to the beginning of this year, in the first 3 months of this year, we saw that the U.S. economy actually contracted by more than 2%. Most of that had to do with the really harsh winter that was experienced here in the United States. And this is an economy that depends really heavily on people spending money. But that harsh weather found that people just weren't out and about spending, and that really had an effect on economic activity. Fast forward to the next 3 months, we saw the economy grew at a rate of 4.6%. That's a huge jump. Now, economists were saying, well, don't expect something like that for this third quarter, but still, 3.5% is much better than what many economists were expecting. And in terms of how it's being taken on here at the New York Stock Exchange on U.S. markets are a bit mixed at the moment, but that really has to do more with corporate earnings than it has to do with some of the fundamental economics that we're hearing here in the U.S.
So, Samira, the latest numbers a little bit perhaps more sustainable, but of course the US can't be immune to what's going on across Europe and across parts of Asia. We are seeing a slowdown more widely, aren't we?
That's right. And I think what economists are going to be looking at for the GDP for the next 3 months is really whether or not this economy is going to be affected by the kinds of slowdowns that we're seeing in Japan, in Brazil, in China, and as well as in Europe. You know, the U.S. exists sort of in its own little bubble, and so it's likely that we may see some of that affect the economy here, but also at the same time, you have to remember that the last 3 months of the year occupy two really big seasons here in the U.S. It is the Christmas season and the Thanksgiving season, which is big shopping times here in the U.S. And so a lot of people do expect some heightened economic activity in terms of shopping.
Samira, it looks like you will be enjoying that. Thank you very much for your time. Samira Hussain in New York for